We found an unusual trade worth $95.8 million on Tesla stock options on the last trading day. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is now trading Tesla stock. Are they bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options, time, and sales tape. On the last trading day, September 6th, at 1:02 p.m. at the 6-second mark, these 40,000 options were being traded. November 15 options at the 225 strike calls and December 20 options at the 225 strike calls. So what is this wealthy investor doing? Are they closing out of these trades or opening these trades? Or could they be doing both? Because that is very important to analyze, which is something that a lot of other websites and scanners don't do. So that is why they cannot get very accurate analyses of unusual option activity than how we do it, because we spend a lot more time diving deeper into the data. So for example, these November 15 options, let's take a look at what they were doing, and these December 20 options. So we can see here that those 40,000 contracts that were being traded at the 225 strike calls, well, there was 75,000 open interest. And so there is a good chance those 40,000 they were trading were actually closing trades. And what they were doing was rolling their options to the December 20 options. And how do we know that these are the new trades? Well, if you take a look at the 225 strike calls, you can see the 40,000 much greater than the open interest of only 1,470, because there is no way you could have closed out of these trades if there was only 1,470 that were previously opened, which is what open interest tells us. And so now that we know that these are the opening trades, we can do a quick calculation of the total trade costs, because these November 15s are the closing trades, and these December 20 options at the 225 strike calls are the opening trades. And so we have 23.95. We multiply by 100 because each option represents 100 shares of stock to get $2,395 per call option. And since we know there was 40,000 contracts that were being traded, we multiply that out and we get $95.8 million. But keep in mind, even though this is a $95.8 million trade, Tesla is a $600 billion market cap company. And so this is just a drop in the bucket here. And so that is why not all of these unusual trades will be profitable. Even this one might be a loss because it is still higher risk in comparison to the trades that we share on our website. We'll put a link at the top here where you can gain access to better trade ideas with a higher probability of profit and lower risk. And that is why we diversify with these higher quality stock picks based on this type of data, which helps us become more profitable in the long term. Now, another piece of information that is very important to figure out when we analyze unusual option activity is whether or not a wealthy investor has been profitable in the past. Because we know that this investor was closing out of a previous trade for these November 15s, and they closed them out by rolling them for a price of $19.65. So when they closed these out, were they profitable or were they at a loss? Because if they were at a loss, then this increases the risk of following this wealthy investor's trade. But if they were profitable, then they made a good decision previously. And so this does actually increase our chance of profit. So let's take a deeper look at this wealthy investor's trade. If this 19.65 price that they closed out of is higher than when they originally entered this trade. And so based on our analysis of wealthy investors, where we monitor their trades, we found that this investor opened their position back in August. And this was August 12th, when Tesla was trading at about $197 a share. And we can see that these November 15 options at the 225 strike calls, those 40,000 that were being traded were opening. You can see the open interest of just 5,101. And you can see the price they paid, $12.95. And so because this is less than the 1965 which they closed, that means that this wealthy investor is actually profitable. And we can see on the charts that ever since this wealthy investor got into this trade, Tesla has gone up about 6%. And so that is why those options they closed out of is profitable. And so because they are profitable, we also went to these December 20 options. And you can see that at the 225 strike calls, we are also in the same position. POS stands for position. Green means buy, where we also bought these to open. And we can see that when we analyze this trade, that these call options are clearly long bullish trades, because you can see here on the x-axis of this profit loss graph represents the share price of Tesla. As it goes up, these options increase in more profits. If it goes down, it becomes more negative loss. And that is why it is going long bullish on Tesla. And we can confirm this with the Greeks here. The delta is positive. If it was a negative delta, then it would be a short bearish trade. And so based on this analysis, we know that this wealthy investor is going long bullish on Tesla, but rolling to a further date out to buy more time, locking in some profits. But again, as we mentioned, this is still a higher risk trade in comparison to the trades that we share on our website. So if you want access to the better trade ideas, make sure to go to our website. We'll put a link at the top here. Let us know in the comments below, what do you think will happen to Tesla? Will it be higher by the end of the year when these options expire in December? Or will we be much lower? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.